And I don't think it's ever been more important to listen to what we're saying, because the acceleration in everything is going to make the opportunity for people to protect themselves become harder and harder and harder as time goes by.
Prepare for a compelling discussion with Andy Schetman of Miles Franklin. In his view, bank bail-ins are an impending storm on the financial horizon, and most people, even investment professionals, are blissfully unaware of the impending upheaval. In this conversation, Andy provides a unique perspective on why he anticipates that the gold and silver markets are on the brink of a dramatic shift. As individuals and investors turn to these timeless assets that have safeguarded wealth for millennia, the possibility of vanishing precious metal inventories and surging premiums for physical bullion comes into focus. This conversation is a vital exploration of what the future may hold.
Yeah, well, I mean, first and foremost, and I appreciate that. Look, I think that it's obvious to me that this country has been lulled into a false sense of security, thinking that we can do whatever we want when it comes to borrowing and spending. In August alone, the current administration spent over $527 billion. And it took us until 1975 to accumulate $500 billion in debt. This administration has added more than that in the last 18 days. You got the former head of Walmart coming out and saying U.S. consumers are starting to buckle. You look at an institution like Bank of America, and it bought $760 billion worth of long-term treasuries and mortgages, with almost all of the purchases occurring in mid-2020 at the absolute peak of the long-term bond market prices. And not to mention, they have been the massive silver short on COMEX for the last year, the big one that's been short as much as 1 billion ounces. Who the hell would do that in this environment? And I wonder, could this be that Lehman moment? Their unrealized losses on their bond portfolio is staggering. Could this be the one bank, the one commercial bank that is the sacrificial lamb? And, you talk about that moment. I've talked a lot about the moment where OPEC dumps the dollar and we have this tsunami of inflation. And I can't help but think that, and I didn't see this one coming, and that's the way it always is that you have an idea, and maybe the idea comes to fruition, just not the way you thought. I mean, we have a war that is escalating, could very quickly escalate into a regional war, and you get Iran and the United States directly involved. You could see a lot of these countries that are OPEC countries that are in the Middle East side with the BRICS countries, side with Iran, side with the Arab countries, and enact some sort of an embargo. The Strait of Hormuz, this is a checkpoint for nearly 20% of the world's oil, and look at the countries that are there right now, Iran and Egypt and all these new BRICS countries, these countries that are Arab friendly, I should say. You could see a situation where we see inflation really start to spike as a result of much, much higher oil prices. Or it could be that moment where OPEC just says, look, our interests are very divergent, whether it be geopolitically, whether it be in terms of pricing oil. You guys are going green and we're not. The last time we saw the repo market start to really dry up, remember, that was when the overnight lending went to as high as 10 or 11%, and the market started to freeze up right before the big crisis. And I think you could see that again. We are seeing a massive draining of liquidity at a time when businesses who need to refinance at higher levels or are paying more money to keep inventory coming in because of the line of credit going up related to prime or whatever it is, the business environment is screaming recession right now because of what's happening with the credit markets. And we can always talk and point to the inverted yield curve, which going back 50 years or longer has always been the precursor to a recession every single time. So maybe now they finally admit we are heading into a recession, but all of these things are converging at one time, which tells me, to your seasonality question, this is a very dangerous time to be a traditionalist. And as our friend Rick Rule says, there are times where if you are not a contrarian, you will be a victim. And I have a feeling we are entering that zone right now. Just look at the S&P 500. You take the top 7 companies out, and the stock market, the large, broad stock market, is down for the year or barely up. It's 7 companies holding this all up. And you start to see tightening and recession and war and rising oil and rising inflation. I mean, all of these things are converging at once. I don't like what I see, not even a little bit. You know, what's happening with the BRICS countries, they're not only are they the ones that are buying all the gold, but they're also the ones that are selling all the treasuries. And they've just announced a 3-year de-dollarization plan officially to trade in local currencies like we're seeing right now. And the trading in local currencies has saved these countries billions of dollars already by ditching the dollar. China saved over 10 billion by not using the dollar in oil trades, by using the yuan in settlements with Russia. India saved over 7 billion by purchasing oil at discounted prices from Russia just since February of 2022. And they purchased 186 billion worth of oil from Russian suppliers from China. Here, we're seeing massive outflows in metal continue. We're down to a multi-year low in gold on COMEX, down to 20 million ounces. Another 500,000 ounces went out this week. 200,000 ounces of gold out the ETFs. The markets, whether it be exchange for physical or outright deliveries off the London Metals Exchange, the Shanghai Metals Exchange, the COMEX market, they are being bled dry. Look, even the Shanghai Gold Exchange has seen the lowest level of silver that they've had since silver squeeze. Big deliveries keep happening, and the central banks keep buying. And the trend is continuing in 2023. So this is the same thing that we've been talking about, but it's accelerating. And little by little by little by little, logarithmic decay, bang. The gold market blows up. The oil market blows up. The dollar market blows up. What's the first one to do it? Don't know. What is the catalyst to the other markets when one blows? Don't know. But if you don't see this happening, you are not watching. Last thing, I promise. We are also seeing a concerted effort by the Shanghai Gold Exchange and the monetary, what am I trying to say? The Russian gold markets. There's a group, it's called the NRA, SFO NRA Corporation, and it has to do with these Russian, the Russian gold market. There is a concerted effort for these two to join together and to break the West, to break the Western price setting system. And that's coming. You're going to see these countries who have accumulated and are producing all the metal, they're going to render or expose the Western markets as being obsolete. In fact, when the Shanghai market was formed, like in 2014 or 15, the guy that started the Shanghai market, or the politician or the Chinese leader, whoever he was, I'm butchering who he really is, but an authority in China said, when we finally let the gold price be where it should be to expose the real gold price, people are going to be shocked. That's ultimately what they're trying to do. They're going to accumulate all the metal and then they'll reprice it over there. The West will have no pricing power because everyone is going to see that this fractional system, this leverage system, this rigged system is a bunch of malarkey, and it will be a cash and carry system with no futures over there. This is all happening as we speak. And I don't think it's ever been more important to listen to what we're saying, because the acceleration in everything is going to make the opportunity for people to protect themselves become harder and harder and harder as time goes by.
As we conclude this enlightening discussion with Andy Schetman, the impending possibility of bank bail-ins and the potential impact on gold and silver markets cannot be ignored. We trust you've gained valuable insights from this conversation. If you found this video informative and wish to stay updated on critical financial developments, please show your support by liking and subscribing to our channel. Your engagement fuels our commitment to delivering valuable content. Thank you for joining us today, and we eagerly anticipate sharing more thought-provoking discussions in the future. Stay informed and stay prepared. Until next time.